So what in the world does a Big Mac have to do with trillions of dollars zipping around the globe? Well, it turns out a lot more than you might think. In fact, the story of a single burger can teach us pretty much everything we need to know about one of the biggest economic forces shaping our world today. So let's follow the money, and it all starts with that one burger.
Just look at this image. Seriously, this isn't just a long line for a fast food joint. This is a moment in history caught on camera. It's January 1990. The Soviet Union is in its final days, and 30,000 people are queued up in Moscow's Pushkin Square. They weren't just waiting for a burger, you know. They were waiting for their first real taste of the West. This was way more than an event. It was a symbol of a world that was changing, and changing fast. And what came next was this incredible 32-year saga. Now, what's so fascinating here is that this timeline basically maps out an entire economic life cycle. It all kicks off in 1990 with a joint venture. By 96, the Soviet Union is gone, and McDonald's buys out its partner to take full control. Then for the next 2 decades, they go all in, building this huge local supply chain until almost everything is sourced from right there inside Russia. And then, bam, 2022, it's over. An entire empire, built over 3 decades, comes apart in just a few months.
So yeah, this story, the burger that crossed continents, it's the perfect way to start talking about a much, much bigger topic.
This whole thing really makes you wonder, right? What is this powerful economic force that lets a company build a massive empire in another country? And, as this story clearly shows, what are the huge, huge risks that come with it?
Well, the answer to that question has a name: foreign direct investment. You'll often see it called FDI. So let's break down what that actually means.
To put it simply, FDI is just when a company from one country decides to build or buy facilities in another one. So when McDonald's built that first restaurant and its first processing plant in Moscow, that was FDI. And this part is key. We're not just talking about shipping goods across borders. This is about setting up shop, a real physical presence, in a completely new market.
Okay, now to really get the scale of this, we need to know 2 key terms. First, there's the flow of FDI. That's basically how much money is being invested in a single year. Think of it like water pouring into a bathtub. Then you've got the stock of FDI. That's the grand total value of all foreign investments at any given moment. So that's all the water that's already in the tub. These 2 numbers together tell us both the speed and the sheer size of global investment.
And you know, when you start looking at the numbers, flow doesn't really do it justice. It's been more like an absolute tsunami of global capital.
So how big are we talking, really? I mean, how much has this whole thing grown since that very first McDonald's opened its doors in Moscow?
Well, this chart says it all. Just look at that. Back in 1990, the total annual flow of FDI was around $243 billion. Fast forward to 2022, and it had exploded to $1.5 trillion. That is just a staggering increase. That's money crossing borders every single year, building factories, opening stores, buying up whole companies.
And to put that into perspective for you, the flow of FDI has grown 7 times over since 1990. That's growing faster than world trade and even faster than the entire world economy. You see, this isn't just some side effect of globalization. For a lot of things, this is the engine driving it.
So what lit the fuse on this explosion? It was really a mix of a few key things. First, companies realized they could use FDI to get around trade barriers. You know, if you build it there, you don't have to worry about tariffs to ship it there. Second, huge new markets just opened up. The fall of communism and this big global shift toward free markets, just like we saw in Russia, created brand new places to invest. And finally, companies just started thinking more globally. They wanted their factories and stores right next to their customers, no matter where they were on the planet.
But it wasn't just that more money was moving around. The direction of that money started to change too. This whole movement has literally redrawn the global economic map.
For the longest time, this was a game played by rich countries. Money would flow from the US to Europe, from Japan to the US, and back and forth. But if you look really closely at the data from the last couple of decades, you can see something fundamental shifting. The lines on the map are starting to go in all sorts of new directions. So today, yeah, the United States and Europe are still massive destinations for investment. But look who's right there near the top: China, pulling in an incredible $189 billion in 2022. This shows that developing nations aren't on the sidelines anymore. They are right in the middle of the global investment game. And here's the other side of that coin, which is just as important. It's not just money flowing into China anymore. Since around 2010, Chinese companies have become massive overseas investors themselves, buying up assets and building businesses everywhere from Africa to America. The map of money is no longer a one-way street.
Which brings us right back to where we started, the incredible promise of all this global capital flowing around, and of course the ever-present peril.
So here we are, full circle. For 32 years, this image was the poster child for the promise of FDI. McDonald's built an empire of 850 restaurants, it employed 50,000 Russians directly, and it supported another 100,000 jobs through its local supply chain. I mean, by any measure, it was a huge success story.
Until suddenly it wasn't. The great peril of FDI is that your investment is completely at the mercy of the political reality of the country you're in. When the geopolitics shifted, McDonald's had to just walk away, and they took a $1.4 billion hit to their books. That's the price of a burger, quantified on a global economic scale.
And that leaves us with this final question. In a world that is so tightly connected by investments just like these, how do we and how do giant companies even begin to calculate the true price of risk? That's the multi-trillion-dollar question at the very heart of our globalized world.